Ladies and gentlemen, good day and welcome to the Silicon Rental Solutions Limited H1 FY23 earnings conference call hosted by HIM Securities. As a reminder, all participant lines will be in the listen-only mode, and anyone who wishes to ask a question may enter star and one on their touchtone phone. To remove yourself from the queue, please enter star and two. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ramadin Rani from HIM Securities. Thank you, and over to you, sir.
Thank you very much, Faisal. Good evening, ladies and gentlemen. Thank you for joining the Silicon Rental Solutions Limited H1 FY23 earnings conference call. Joining us on the call today are the senior members of the management team, Mr. Sanjay Motiani, Chairman and Managing Director, Mrs. Kanchan Motiani, Director and CFO, and Mr. Shailesh Narang, Finance Head. We will commence the call with the opening thoughts from the management team, post which we will open the forum for Q&A session, where the management will be glad to respond to any queries that you may have. At this point, I would like to add that some of the statements made or discussed on the conference call may be forward-looking in nature, and the actual results may vary from the forward-looking statements. I would now like to hand over the call to Mr. Sanjay Motiani to commence by sharing his thoughts on the performance and the strategic progress made by the company. Post Mr. Sanjay, Mrs. Kanchan Motiani will share details on the H1 FY23 financial performance of the company. Thank you, and over to you, sir.
Thank you, Rani. Dear friends, I'm Sanjay Motiani, Managing Director and Chairman of Silicon Rental Solutions Limited. Thank you, investors and all stakeholders present for attending this conference, and also for the unprecedented support shown to us during our growth journey. As you all know, we got listed on the Bombay Stock Exchange SME platform on 10th October, and we are delighted to be here before you all to discuss the financial position of the company for the period April 22 to September 22, and the journey ahead for the next 6 months and in the next financial year. This year has been a period for growth, and we have extended our base to states where we had less presence. The decision to list ourselves was one of the well thought of decisions, and we are sure to reap the benefits of the same in the coming years. We believe in the philosophy of inclusive growth, and we want to grow taking our shareholders together with us. We want to ensure that we uphold the trust bestowed on us by our shareholders. We have to ensure that their hard-earned money is well taken care of and in safe hands with us. We are accountable to you all, and we assure you that we will not let you down. Silicon Rental Solutions Limited has been in the IT rental business for more than dealing in laptops, desktop, high-end servers, networking products, and CCTV products on rental basis pan-India. Our USP is that we provide end-to-end solution to our clients, and we provide standby laptops, desktop to our clients so as to maintain a near 100% uptime. We are the first ISO 9001-2015 company in this field, and we are the first company to be listed on the BSE SME platform in this field. We provide engineers free of cost for any client having more than 200 systems. We take care of the IT department, the logistics, and the service and support at all locations pan-India. This helps companies to mitigate the expenses and be free to concentrate on their core business and leave these non-profitable departments with depreciating assets to Silicon to handle. Now, our business plan for the next 6 to 12 months. We plan to add minimum 30 to 50 clients in the next coming 6 months to 12 months. We are in negotiations with a number of MNCs, and we are sure to close some very good orders in the near future. We also plan to open at least 4 to 5 new offices pan-India in addition to the ones we already have operational, and this will help us expand and generate more revenue. We purchase equipment in large quantities, and this enables us to negotiate best rates when we procure them from our channel partners. We also have an inventory across the country. This helps us working on very competitive prices and keep our costs down. The other advantage is that as we scale up, our expenses increase only marginally. This helps us in improving our bottom line. We have one-to-one connect with all our clients, helps us to keep a relation healthy and long term. So looking forward to a big growth and big strides in our renting business in the coming years. Let's grow together. Now I hand over the mic to Kanchan Motiani to give the details on the financials.
Shareholders for having trust in our company. Just to give a synopsis, half of the current financial year, when we compare the financial position of the company for the first half of current financial year, our top line has increased by 66% from rupees 1057 lakhs to rupees 1759 lakhs. The operating margins have increased from 41.80% to 43.58%. The company has earned cash profit of rupees 1229 lakhs as compared to rupees 708 lakhs in the corresponding period of the last financial year. The PAT margins have increased from 30.56 to 30.82%. We have demonstrated that we have maintained the profitability even with a 66% growth in revenue. We strongly believe that there is a huge potential in the market. Comparing this 6-month financial with a 12-month period of FY21-22 in a straight line manner will not be correct because the method of charging the debt assets was changed from WDV method to straight line method. As a result of the change, the brought forward depreciation amount was reduced by a sum of rupees 381 lakhs and depreciation for financial year 2021 to 22 was reduced by a sum of rupees 252 lakhs. And profit for the year ending 31st March 22 increased by a sum of rupees 634 lakhs. So effectively, if we remove the carry forward depreciation effect, the actual profit for the FY 21-22 was rupees 639.60 lakhs against a sale of rupees 2,460 lakhs. In the first 6 months of the current year, we have achieved 72% of the entire year sales and 85% of the last year's profit, post-tax profit. If we assume the issued equity in the first half of the last financial year be same as current period, the earning per share has increased from rupees 4.28 to rupees 7.17. We have added 25 new customers during the last 6 months. Looking at the first 6 months, we are very much on the path to cross 25 to 36 crore top line for the entire year, which is nearly a 50% jump as compared to last year. Similarly, we are hoping to touch post-tax figures of 11 to 12 crores for the entire year ending March 2023. The IPO proceeds are being utilized for the purpose for which they were mentioned in the DRHP. We have already paid a bank liability of rupees 850 lakhs and we are hoping on to save on interest costs 50 lakhs on a yearly basis.
Sorry to interrupt you, ma'am. The audio is breaking from your line.
Okay. You want me to repeat?
Yes, sir. Yes, ma'am. Please go ahead.
Okay. Similarly, we are hoping to touch post-tax figure of 11 to 12 crores for the entire year ending March 2023. The IPO proceeds are being utilized for the purpose for which they were mentioned in the DRHP. We have already paid off the bank liability of rupees 850 lakhs and we are hoping on to save on interest costs of at least 50 to 55 lakhs on a yearly basis. Thank you so much.
Over to you, for questions or any queries.
Sir, should we start the floor for Q&A?
Yes.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Reminder to the participants, Anyone who wishes to ask a question may press star and one at this time. The first question is from the line of Rajesh Singla from Society General. Please go ahead.
Hi, guys. Thanks a lot for the question, and thanks for taking my question. And I think congratulations on a very good set of numbers. My only question to you is the scalability of your operation. And currently, we are mostly in the computer hardware renting solution. So maybe in the coming years, can we think of like adding more products, not from the computer hardware, but maybe from the white goods sector? And also, if you can guide about some growth potential for the next year as well, that will be helpful.
I think I did answer the growth potential thing in my this thing. Yes, we are planning quite a few things to be added to our list of our equipment, and so basically we are looking at a lot of new ventures and new tie-ups. But then this I cannot disclose. Yes, we have quite a few things in store, which we are planning to add to our list. And this will be in due course. We will be getting back to you, and we'll definitely give the details very soon.
Okay. So maybe just I know, because see your operations are like
something we can do, but we are still not looking at those. We are looking at something much bigger and better,
okay,
which will be in due course we will come out with the details.
Okay, because your business is highly scalable. You can add any kind of product or anything which is used in the corporate world or anywhere else in the consumer market. So I think the scalability is quite significant in terms of the way you can grow from here.
Yes.
So maybe I missed your initial remarks. So maybe if you can just help me with that, like what kind of growth we could see in FY24, because FY23 is like half of it is already over. So maybe next year growth, if you can provide some insight into that.
Yeah, so you can see in the financial year 23 also, in the 6 months we've increased our turnover by 70%. Our profits have increased by almost 50%. So this is going to continue for this year, and next year again. If you've seen our our marketing plan, everything is just being finalized. So this has been an organic growth. So we are just about going to launch ourselves, and if you, I don't know whether you saw our interview on CNBC. So even that simple interview has got us at least 50 inquiries in the last 2 hours. So our growth has been organic, and this is how we've grown organically over the last years. But now that we have the funds out of the the IPO.
Interrupting, sir. The audio is breaking from your line, sir.
Did you get it, sir?
Now it's fine, I think.
Yeah, it's fine. And you got the this thing, what I said?
No, I think there was it was breaking.
Oh, is it? So basically, I was saying that we've grown organically, and now we are going with a proper marketing plan and with a lot of investment in marketing and creating awareness that there is something like this which is available for people who are wanting to grow. So it's just the beginning, and I think a growth of 50 to 80% is the minimum we can look at for the next few years.
50%, right? Minimum growth, which we can look for in the next.
I'm saying minimum to 50 to 80% in the next few years.
Okay, and it seems like your business is like asset heavy, like you need equipments to lend. So what kind of like cash generation potential do we see in the business, and will you require more debt? Like can you pile on more debt, and or can you how can you fund your like significant expansion going forward in the future?
See, I think we have a very good revenue model, and we are already generating a very good revenue, which actually takes care of our expansion. In addition, we have these funds which we have got from this IPO that is there with us, which is surplus and unused as of now. So our own monthly, collection that we have is pretty substantial. And you can see when we're touching a figure of 36 crores, that means that we have a 3 crore kind of input coming in every month. In addition, we have the IPO funds that we have still not used. And as we grow, our monthly recovery will also increase. So that is itself a very good growth this thing that we have, potential that we have. Mr. Narang will also want to add some points to it.
I'll just add a few things to it. At the moment, sir, you mentioned about white goods.
Yeah.
The pipeline that we have as far as computer and computer accessories are concerned is not yet exhausted. We have tremendous inquiries. We are looking at various orders at 200, 250 computers per company. The number that we are getting is very large. So we are actually going to look at various ways in meeting up that demand. We are also looking at various other options to create a stream where we are going asset light. I understand, and you rightly guessed that, rather you rightly got it, that this particular business that we are doing is comparatively asset heavy, that we have to procure the asset first and then rent it out to people. You are perfectly right in that. So we are looking at certain places where it is possible for us to rent the equipment, which we are going to onward rent outside. We are looking at those models. We are looking at how can we expand the market in a way that we are able to reach larger and bigger customers. So that is all that we are looking at, and we are looking at a very exciting future.
Right. And maybe like in terms of the business prospects, so what is the motivation for a large company like Microsoft or any other big names which you have your client to rent like maybe laptops or computers, like when they can afford to buy these kind of equipment? So what is the motivation behind that?
Service is a very big factor. There's a pilferage issue that happens with big companies, which is one more big factor. Then with us, we take care of the complete logistics, which is not easy for them. For a company to maintain, say, X computers, they have fixed expenses, and the salaries are very high. So when we come into the picture, we take care of everything. So we provide the computers, we give the backup, we ensure 100% uptime because we give standbys for every computer. So we take care of the logistics. So all those things are taken care of by us. So when they look at the full package, it really makes sense. So that is why people have started. It's for those people. It may not be the capital which is important, to save, but the headache of maintaining logistics, service, and especially when this work from home culture is going on. So for them to, deploy those 1,000 and 5,000 laptops in 5,000 different locations is not a small task. Whereas because we are we have a mastery over this, we can take care of it. A company which will, I'll just give a simple example, logistics, sending a laptop from here to Delhi for them, probably with the top brand will cost them probably 2,500, which we do it in 900 rupees. So effectively, they're going to save a lot of money in these things.
So do you have your own logistic or supply chain, or you rent it out?
No. But we have a tie-up. We have what do you call? We look at not the topmost, but because our quantity is huge, we get very, very good rates.
Mm-hmm. And I think there was some reservation also that the business is highly competitive in nature. You have so many people in this unorganized sector. So any insight which you would like to share in terms of the competitiveness of business?
Where is the question? I mean, you tell me, and how many people can afford to buy 100 laptops at one shot and just expect a return of just 3% every month, whatever, 3 to 4% every month and provide service. So where will they be able to, survive? So what competition is there is at a lower level where people need 5 laptops or 10 laptops or such, So when you're looking at a bigger number, and believe me, we have quantities to the tune of 2,500 machines at one location, one company. So how many people can actually afford to scale up to that level?
Right. Okay. Thank you very much. I will come back in the queue.
Yeah. Right, sir. Thank you.
Thank you. The next question is from the line of Nilesh Karani from Magnum Equity. Please go ahead.
Yeah, hi, sir.
Yeah, hi.
Good set of numbers.
Thank you. And it's consistent, so you cannot tell me we just want them out from somewhere and,
Hello.
Hello.
Yeah, I'm audible?
Yeah, I can hear you. I said these are not set of numbers that have just cropped up. I mean, we've been doing this for years and years.
Yeah, correct. I know that.
Thank you.
So just to understand, see, I heard you paid 850 lakh rupees ka loan. That is what I understood, correct?
Yeah.
So now, what is that part of loan remaining, or we have fully paid up what?
Yeah, we've paid up the full loan that was there as of, during the time of the IPO, basically.
Okay. So now there is basically we are debt free actually.
Yes, you can say that. A small sum here there, but yeah, more or less we are debt free.
Okay. And sir, another question is how concentrated is our business? Like, our top clients and all, how much concentration is there, or we are widely, our
No,
top
we are very widely spread out, basically. We don't have a client which is, more than 5% of the business.
Okay.
We have 400 different clients, and none of the clients cater to more than 5 to 7% of the total turnover.
Okay, sir. Okay. That's it from my side. Thank you so much.
Yeah, thank you.
Thank you. The next question is from the line of Shubham Jain, an individual investor. Please go ahead.
Hello.
Yeah, hi.
Sir, first of all, congratulations for good set of number.
Thank you. I hope you'll invest more with us now.
Yeah, definitely, sir. Sir, I just want a simple question. Why should customers select silicon? Might be in our market some other unorganized business too. So why should customers select silicon?
See, there will always be competition, first thing. Second thing, we are lucky that we are in a field where competition is less because it's a very investment-driven business, So the competition is less. Not many people can, invest the kind of numbers that we do and then wait for the business to, give you returns. So competition. So now the other point is that why they should come to us is because we are a 25-year-old company. Our rental business is, so basically we are in the service industry from 25 years. So our services are 40. So anybody can just buy that and give it on rent, but nobody has the capacity to give the service that also pan-India the way we do. So we are present in quite a few cities, and so for any big company, they need a support system which will be, robust, and it'll be, they shouldn't have any issues, basically. They shouldn't have any complaints. So that we can cater to because we have a 25-year service experience, and we are present pan-India. So those are some of the main reasons that, then of course our technical background is very good. So we are from the technical background. I'm myself an engineer. So all these things help, in getting good clients and getting good sales.
Okay, thank you, sir. Sir, my another question is, as I am seeing the balance sheet, so it's just like our cash has been reduced sustainably September 22 versus March 22. So, sir, any other reason or particular we bought some?
What has reduced?
Sir, cash balance. Why are the cash has reduced substantially in September 2022 versus March 2022?
See, sir, cash basically has reduced because this is a cyclical business. It keeps on coming and going. Because of increase in sales, there is a small amount of increase in debtors, which is understandable. Further, we have to keep on investing in our assets. As you can see that there is a growth in the tangible assets also that we have. So typically, this is what happens is that there are times where we get large orders, and those large orders have to be catered to. As you are aware that we don't cater to individuals who order 1 or 2 or 4 laptops. We go for large number of those types of things. And because of that, sometimes we get a time where we have to buy maybe 200 laptops together or 250 laptops together. And then they take a few days maybe to get ultimately sent to the location where the rentals start. So all that gives a time where sometimes the cash is up, sometimes the cash is down. So it's a cyclical process and depending upon the order position and delivery position.
Okay, sir. Thank you so much, sir. That's it from my side. Thank you.
Thank you. The next question is from the line of Utsav Arasara from Nilesh Parekh. Please go ahead.
सर कैन आई स्पीक इन हिंदी?
ये ठीक है।
हाँ, मेरा क्वेश्चन ये था कि मैम ने कहा कि ये जो अपना आरएचपी में लास्ट ईयर 9 करोड़ का ये डिप्रिशिएशन था और जो ये सेट ऑफ रिजल्ट आया इसमें था एज पर एंड ऑफ FY22 उसमें 5.2 करोड़ का डिप्रिसिएशन दिखाया गया है, तो इसका क्या रीजन है डिफरेंस का आरएचपी और रिजल्ट में?
सर मैं आपको बताता हूँ, हमने जब भी हम पब्लिक इशू के लिए आगे आए हमने हमारा मेथड ऑफ डेप्रिसिएशन चेंज किया। अर्लियर हम रिटन डाउन वैल्यू मेथड में करते थे और फिर हम स्ट्रेट लाइन मेथड में इसको चेंज किए। उस चेंज के वजह से जैसे मैडम CFO ने बताया होगा, आपने अगर सुना होगा तो जो चेंज हुआ उसके वजह से कैरी फॉरवर्ड डेप्रिसिएशन हमारा आया और ड्यूरिंग द ईयर का डेप्रिसिएशन भी घट गया, जिसके वजह से प्रॉफिट जो था वो 6 करोड़ से बढ़ गया लास्ट ईयर का। तो उसको आप अगर कंपैरिजन में देखोगे तो इसके वजह से आपको ये दिख रहा है कि डेप्रिसिएशन चेंज हुआ है, बट अदरवाइज those results are comparable and the reason is the change in method of depreciation.
ओके, तो आरएचपी का जो 7.5 करोड़ का प्रॉफिट आफ्टर टैक्स है वो रियल गिनना चाहिए ना?
हाँ जी।
ये ओके, और उसके मुकाबले ये हाफ ईयर का 5.5 करोड़ के अराउंड प्रॉफिट आया है, तो वो साल का मिला के 12 करोड़ का हो जाएगा, ऐसा आपका मानना है?
बराबर।
और नेक्स्ट 4 to 5 ईयर्स ये पेट में आप 50 to 80% ग्रोथ का अजम्पशन करते हो सर?
जी सर, हम करते हैं।
Every year 60 to 80%.
We are expecting robust growth in our orders and we are sure that we will be able to maintain this bottom line.
So almost next 4 to 5 years ये carry on रहेगा क्या?
हमारे हिसाब से जरूर रहेगा सर, क्योंकि we are looking at this business in a very bullish manner. We have huge plans, very good plans for the future. आपकी सहायता रहेगी, आपका सहयोग रहेगा तो जरूर रहेगा।
नहीं सर, मुझे बहुत बढ़िया आपकी कंपनी और लिस्टिंग तो एट ट्रायल प्राइस पर हुआ था, लेकिन आज तो ऑलमोस्ट डबल हो गया है। आपकी कंपनी बहुत बढ़िया है। थैंक यू सर।
थैंक यू सर। थैंक यू सर।
Thank you. The next question is from the line of Shivani Mittal, an individual investor. Please go ahead.
Hello. Thank you for the opportunity, sir, and congratulations on a good set of numbers.
Sorry to
Most of my
interrupt you,
questions.
please increase the volume of your device or speak a little bit louder.
Yeah. Sorry. Am I audible?
You are audible. Louder.
Yeah. So most of my questions have been answered. Just one thing. Can I have some color on your customer acquisition strategy and what is the turnaround time for converting leads into clients?
You are talking of acquisition strategy and
Turnaround time.
turnaround time.
So, yeah. As in converting leads into clients, like.
Okay.
That is never fixed, madam. That cannot be fixed because clients can, depending when the project is starting, it could be 6 months in advance. They keep floating the inquiry, and actually have overnight.
Sorry to interrupt you, sir. The audio is breaking from your line.
Now it's fine.
Yes, sir. Now it is better.
Basically, clients have float the inquiry 6 months in advance while they are in the process of finalizing the place, the location, and everything else. And sometimes we get orders overnight where people want 100 machines, 200 machines to be deployed within a day or two max. So there's no fixed this thing, how fast the orders close or.
But madam, we are looking forward.
Yeah.
We have got various inquiries now, at least 25 inquiries in the pipeline since the CNBC interview was aired on the television today. So I hope we are going to convert most of it in the next 15 days or so.
Okay. And sir, one question, if you could throw some color on what will be your steady state net profit margin? on a full year
What
basis?
will be the net profit?
Net profit margin on a full year basis or some steady state rate, whatever you could provide?
See, the PAT margins are in the region of 30%, as you must have seen. In spite of the growth in operating margins, our PAT margins are more or less at 30.82. At the moment, we expect it to continue at this rate. What is more important is that these PAT margins have been achieved in spite of a 65% growth in turnover. So that is something which is there. Normally, you would be aware that if growth in turnover is there, it also is at a cost of reduced margin. In our particular case, we have not faced that. Going forward, looking at the market depth, I am sure that we will be able to clock this kind of 30% plus post-tax for times to come. In the horizon that I can see, the visibility that I have, say 18 months, 24 months period, I don't think this is going to be impacted. I cannot, of course, say anything for 4 years, 5 years down the line. A lot of things can change over a period. But at where we are looking at a very glorious future.
Hello.
Thank you. The current participant has left the question queue. We'll move on to the next question from the line of Siddharth Agarwal from Prudent Value Partners. Please go ahead.
Hi, good afternoon, sir, and thank you for the opportunity. Am I audible?
Yes, you are.
Okay, great, sir. So I just went through your balance sheet, and I think for this year, on average, we have roughly 30 CR worth of assets. I think the March 22 balance sheet had 24 crore assets, and September balance sheet has 36 crore. So roughly the average would be around 30 crore on an average asset for the last 6 months, right? The assets in the company. And I am assuming all these assets are equipments which we are renting out. Is there any other sizable asset here which is other than the equipment here in this balance sheet?
There could be 5 or 10% of some other non-rental asset. Could be a motor car or something like that. But other than that, most of them are rentable assets.
Rental assets. So assumingly we had say 33 crore worth of rental assets. So on those assets we were able to get a rental income of 17 CR for the first 6 month period.
Right.
Is that correct?
Yes.
So that amounts to roughly almost 100% yield. So is it that the company is paying out the entire cost of the laptop in the first year as a rental itself?
Can you repeat this last question once again? Didn't catch you.
So my question is, we had 32 crore worth of assets which we could rent.
I understood that. Yes.
And for the first 6 months, we had 17 crore of revenue, which I am assuming is just rental revenue, right?
It is, yes.
So 17 crore for 6 months, which means for the same asset, if it was rented out for the entire year, we would have earned roughly 34 crore of rental income, right?
Right.
Just doubling it.
Correct.
So which means on a asset base of 32 crore, rental income is 34 crore for the year.
Correct.
So a company, anyone who is using the product basically is paying out the entire cost of the equipment in the first year itself as a rent. Is that how this industry works?
No, sir, it doesn't work like this. What happens is that the figure of 34 crores or 32 crores, which you can see in the balance sheet as far as assets are concerned, is the written down value. So you don't have a computer valued at 100 rupees there. It is, if you take, even if I take the straight line method and I divide the depreciation over a period of time, the value of the value of the asset which is there in my balance sheet is greatly reduced. So if you say what is the original cost of that particular asset, it would be perhaps 100 crores plus. So it is not correct to say that if I have a 100 rupee asset, whether the my customer is paying me 100 rupees in that year itself. No, I really hope it was like that. It isn't. The figure
number 25 month in addition. So that is addition.
So what we have is, after 6 years of having this company, this is the net WDV of the asset. And that is why you will be able to see that figure more or less matching. And basically in this particular industry, what happens is that most of the computers, they either sometimes get phased out or they continue to be made usable. So the advantage, or you can say the kicker, comes at the later stage where the rental keeps on coming and the depreciation has fallen down to a large extent. So that's how it works.
Okay, I understood. So over what is the useful life that we use currently for depreciation purpose? Is it like a 3-year period, or what is the life that we depreciate our computer set?
We use around an average of 5 years, and it differs from different types. Like you have servers, you have laptops, you have various types of other machines. So an average is around 4 to 5 years.
Okay, which seems like a realistic, I mean, in real world case also, because we would tend to change our, I'm assuming that for a corporate, and when you are lending to high-end corporates who are your clients, so they would not want to use a machine which is more than 4 or 5 years old, right?
Yeah.
So basically, we see what we do is we buy new machines for all the high-end corporates, and they normally don't use it beyond years or 3.5 years on the maximum side. So it works out very good for them. And then what we do, we have a second level of clients who require much cheaper machines.
Okay.
And then the schools are there. So those machines can be used for those people where, the requirement is of a very basic machine and not the high-end machine. So that is the reason our profit keeps coming much later.
Okay. So if I want to understand it over the economic life of a asset, say whether it is a server or whether it is a laptop, so if we spend say 100 rupee on it, so how much is the rental that we are able to, on an average, get out of that asset over its useful life?
How much we got till the end of the life, you mean to say?
Yes, I'm assuming we would, gauge it out after 5-6 years.
Yeah, of course.
So over the useful life, how much is the rental that we are able to gain out of that?
2 to 3 times.
2 to 3 times.
Yeah, 3 times.
Okay. And for a new asset, on an average, we expect a roughly 3% per month rental on that.
Yeah.
Okay, great.
But then we see, it's not only 3% is not such a simple calculation. We do provide a lot of service for it. We take care of the logistics. So all the back end, support that we give is what, helps us get better orders and better.
Okay. Are there any services also for which we charge the clients directly?
Oh, yes.
Other than the rentals?
No, we try to incorporate everything into the rentals, basically.
Rentals. Okay. Okay. And in terms of client concentration, you mentioned that no client is more than 5% of our turnover, and you also mentioned that we have more than 2,500 machines deployed at single client. So today we have more than 50,000-60,000 machines which are deployed across clients.
Oh, we have around 35,000 plus machines.
35,000. Okay. Another question that I have is that we are a 25-year-old company, and obviously we have grown very well over the time. What is the reason that we have so much of our revenue concentration just from Maharashtra? If we think about it, all the IT companies or the startups, are more prevalent in either Karnataka or Andhra Pradesh or NCR.
See, actually what has happened, we are from Bombay, our orders are from Bombay, and we from here cater to pan-India delivery. And frankly, like you've seen, this business requires a lot of investment. So whatever we earn, we keep plowing it back. And that's why our profits are showing, and our money goes back into the business. That's why our balance sheets are so nice. So now what has happened is with this IPO, the reason why we went in for the IPO was the same. Okay, we will have some surplus money. We will now we can start opening additional branches all over India, and then we can expand, and then you will see a lot of clients from Karnataka or whether it is down south of Chennai. So we already have a few clients. But this will multiply now now that we have the funds to invest. Because what happens every time you have orders for 200, 500 machines, you have an investment of nothing less than a few crores, So that there was a limitation. And now that we have the funds, we will grow much faster and pan-India.
Okay, great. And may I also ask, what was our borrow cost when we were borrowing the fund?
What we've been doing, we've been using the LAP, rather than borrowing from one second, this time.
See, this borrowing basically comes from banks only. So we are also in the same market where you and everybody else is. So but the idea at the moment is to utilize more of our own funds, not to depend on borrowings. But yes, wherever it is necessary, we'll have to go to the bank, so that the borrowing cost ranges between 8 to 10%, how it is available now.
Okay. And so since this is a capital intensive business, so our rate of growth is in a way contingent on how much funds that we can arrange. One is the funds either source could be either through our retained earnings or through borrow. So what kind of leverage as a business model are you comfortable with? So what kind of leverage would you like to run this business with?
Yeah, I'll tell you. See, we are basically going to ensure that whatever new fields we are going to expand into in terms of clients and all, we have to be very careful. We also have to ensure that whatever the rentals we bill has to be recovered. We are not at all interested in doing just a growth and just spreading our wings everywhere. We are being very cautious. We are going step by step. We are ensuring that we deal with the best of people so that we get our money for whatever we raise our bills for. Having said that, at the same time, we are open to look at opportunity our way. We have IPO funds, so we don't look at any kind of borrowing as of now. We are taking care of for the future, but looking at the opportunity that is made available to us, maybe depending upon the company who is interested in terms of being a customer, we're going to look at various options and then we'll consider. Definitely, we are not going to over leverage. I don't think I'm interested in more than maybe 1:1 in terms of debt. I will not go beyond that because no sense of leveraging too much. This is what we are thinking at the moment. But we are not looking at debt today because we are still going to use the funds that we've got from the issue.
Okay. So assumingly, so say for FY24, if we want to do a 50 crore worth of top line, so that is 16 crore additional income, rental income next year. And if it means that, the asset that we need is maybe another, say, 40 crore worth of asset to get another 16 crore of income for the next year. So how are we going to fund this 40 crore of asset?
Yeah, it will be a continuous process, sir. I mean, we have the wherewithal where there will be a growth in terms of rental per computer growth also. There is also going to be the number of machines that we keep on buying. It's a continuous process.
Yes.
We keep on ensuring that more and more customers are there. We keep on increasing the rental. So it's a process. But what you said, yes, this is how it will go on growing. We are working up with various asset-light models also. We are looking at working out how we can get the rentals without actually investing in purchase of the equipment. We are looking at various options, sir, and let's see how things pan out.
Okay. Thank you very much. And just on the last question on the last bit that you just mentioned. So we are talking about an asset-light model. So we, in a way, we're solving this problem ourselves for the companies, that companies should not need to invest in the asset, and we solve that problem for them, along with the service side of the thing, once maintaining them.
Right.
But now, who would be our client? I mean, what is the value proposition for them who would like to, buy asset and lend it to us?
There are many finance companies who would be interested to do that if they are assured for a continuous rental coming in. So we are looking at various options. Things are under discussion. Wouldn't want to divulge much on that, but that's what is on the drawing board at the moment.
But as a business model, what kind of a spread? Because we have to pay a rent and we will get a rent. So what kind of a spread is practically possible, as a business model?
We are looking at more than a 30-35% spread. Otherwise, it won't work for us.
You mean if they are charging us 2%, then we get another 30% of that just we charge 3%. Is that what you mean?
Yes.
Okay, great. Thank you very much and wish you all the very best.
Okay, sir.
I think we should wind up now, Mr. Dhani.
Thank you.
Faisal, do we have any more questions?
Sir, we have questions in the queue.
Can we keep this for, shouldn't we wind this up? When we should, it's more than an hour almost. And we could take these questions separately and tell you the answers or something of that sort.
Faisal,
Sir, what do you think?
Sir, ideally, since this is our first call, we should take the questions, unless you have another meeting lined up.
Okay, let's extend for another 10 minutes or so.
Thank you.
Thank you.
We'll take the next question from the line of Abhishek Sharda, an individual investor.
Good evening, sir. Thanks for the opportunity and congratulations for such a robust set of numbers.
Thank you very much. Congrats to you also.
Thank you, sir. Sir, I just want to ask, what are the major triggers that led to such a good growth in these last 6 months? Is it majorly due to some aggressive acquisitions of your machines in these 6 months, or some big client that due to some big customers?
It hasn't been in the last 6 months. It's been continuously there for last 6 years. Even last year we made 100% year-on-year profit. Even before that. And this year also we've done around 70% increase in our sales and around 50% in the last 6 months. So it's not been in just last 6 months or so. It's been last 6 years that we've been consistently performing.
Right, sir. So basically, customer addition is a continuous process, and we are adding customers.
100%.
Okay. And sir, I just want to ask, you cater to almost all the business industries, right?
Yes.
What is any one or major business industry that contribute to our revenue? One or two, the major business industry?
No such thing.
So it's a diversified revenue comes from diversified.
Anybody who's using computers will be our client. So there's no, this thing which will give us revenue. Anybody and everybody who uses computers can become a client.
Correct. Understood, sir. And so lastly, I just want to ask if you can throw some light on your debt reduction plans.
We don't have any debt. We've already paid off.
So you are debt free right now?
Yes.
Okay.
Almost debt free.
Okay. Fine. Thank you for detailed responses.
Thank you.
Thank you.
Ladies and gentlemen, please limit your questions to one per participant. Should you have a follow-up question, we would request you to rejoin the question queue. The next question is from the line of Bhavya Joshi from Chris. Please go ahead.
Am I audible?
Yes, sir.
Yes.
Yeah. Congratulations on a good set of numbers. So
Thank you. Congratulations to you also.
Yeah, thank you. And so I just had a question, on acquiring a customer, do we take any kind of deposits? Some kind of a percentage of asset value that we are going to give out to them or something?
No, sir, we don't. I feel the moment people want to pay deposit, they will prefer buying the asset rather than, So we don't do it. We do our due diligence. We do the complete check on the client, and we cannot expect a Tata or a Reliance to pay us a deposit, so that we don't do.
Okay. And also, are we planning to tie up with any data centers, or what is our growth strategy? Are we supplying to any data centers right now? And if yes, what percentage of revenue would that be?
I said we have all, you name it, and we have all kind of clients. So yes, we do have clients in the data center field. And what percentage?
How much percentage would that be?
No, I won't be able to tell you that. I don't have that data immediately with me.
Okay. And do we supply to any government bodies or someone?
Yes, we do.
And you won't be able to share that proportion too, right?
Exactly. No.
And what is the dividend payout ratio?
What is the?
Dividend payout ratio?
Sir, we have not yet declared any dividend.
Yeah, just a month since we've declared and the IPOs come out.
At the moment, till now, we have not declared any dividends. We have used all our funds for reinvesting in the business. So nothing in the pipeline at the moment. We will see how things turn out.
Too early for a 1 month old company, listed company.
Okay. Thanks a lot. All the best. Yeah.
Thank you. Participants, please limit your questions to one per participant. Should you have a follow-up question, we would request you to rejoin the question queue. The next question is from the line of Rajesh Singla from Society General. Please go ahead.
Yeah, hi, sir. Thanks again. My question is regarding the capex guidance, if you can provide for the second half of this year. I know you raised 20 crore from the IPO, and how much capex you would be spending in 2023, if you can share that. And you had a gross block of 68 crore, I think, at the end of September 2022. And you spent 15 crore during the last 6 months. So how much of this 15 crore is is this 15 crore fully deployed right now, or you will generate more revenue on these 15 crore in the coming 6 months?
Sir, our purchase program spans across the whole year. So if we have purchased 15 crores worth of assets, they would be deployed. I mean, the purchase would be gradually across the period. And roughly it takes 10-15 days for the deployment. So even if we have invested something like 15 crores, the rentals would start after that. So yes, what you say is right, that going forward, the rentals will slowly keep on increasing. Suppose hypothetically we stop the purchases, my rentals would keep on growing initially for say 6, 7, 8 months, and then they would start tapering off because there would be no addition. So, but going forward, we are looking at, we are a little bullish on the additions part. We have the funds, we have retired certain debt at the moment, and going forward, we want to utilize this money available for that. Generally, we have a capex of around 2 crores odd per month. Maybe we will increase it to 3 crores, and we'll look at various opportunities. We have to do a cost benefit analysis, and then this is how we are going to plan. So that's how we are going to go ahead with that.
Thank you. Mr. Singla, may we request that you return to the question queue for follow-up questions. We'll take the next question from the line of Sahil Chopra from KIFS Trade Capital. Please go ahead.
Yeah, hi. Thanks you for your opportunity, and congratulations on good set of numbers. So if I go through your IPO document, in that computer software and accessories for hire is constituting around 50 crores in the gross block. So can you provide the bifurcation for the same?
Difficult to give you a bifurcation immediately, sir, but then it could be 40 plus 10 or 45 plus 10. I'm sorry, I don't have the numbers immediately to give you that breakup.
Majority of assets are computers, right?
Yes.
Out of 50 crore, we can assume around 80% are computers?
Maybe even more, yeah.
Okay. And what kind of depreciation rate we charge on these assets?
The depreciation rate we follow and by straight line method. That is what we have changed to. So we follow that, assuming a lifespan of 3 to 5 years, depending upon which type of asset class it is. Servers is different, computers, laptops sometimes is different. So it depends upon the asset class. But that is the period.
3 to 5 years.
3 to 5 years, sometime in some cases even 6.
Okay. And what kind of average payback period you look while buying any asset?
Normally we look at a payback period of not more than 1.25 years, because that's where the money has to come back. But then over a period of time, the rentals that the asset gets reduces after 2 or 3 years. But that's how it is. So like if you have a 3% thing, it's in the 1 year you would just one thing. Yeah. So over that period will be 3 years, right? So that's how that money would come back. and then post 3 years, I'm sorry, and then after that, the thing starts slightly depleting, and then the asset keeps on being used for 5 years, 6 years or more.
Thank you, Mr. Chopra. May we request that you return to the
Okay.
question queue for follow-up questions. Thank
Thank
you.
you.
The next question is from the line of Vivek Hinduja, an individual investor. Please go ahead.
Hello, everyone. Thank you for the opportunity. So I have one question. If you could enlighten us on the competition we have in this field and who are the competitors of similar size or more bigger?
There are few, but more or less everybody's in. I mean, there are few who are at par with us. Not many who are bigger than us. So I won't be naming them. I wouldn't like to.
And they all are of mean similar size. Like if for example, if on a scale of 1 to 10 in our state of Maharashtra, we would be on what ranking?
We'll be among the top 5.
We'll be among top 5. Okay, fine. Thank you.
Yeah, thank you.
Thank you. As there are no further questions from the participants, I now hand the conference over to Mr. Ramadin Rane for closing comments.
Thank you, Faisal. On behalf of FAME Securities Limited, I thank Silicon Rental Solutions team for giving the time we spent on this call and responding to all the queries in a detailed way. I would also like to thank all the participants for joining this call. Now, I would like to hand over the call to the moderator.
Thank you.
Thank you.
Thank you so much, sir. Ladies and gentlemen, on behalf of FAME Securities, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines.
Thank you very much.
Thank you very much.
Thank you.